Good morning, afternoon, or evening, as the case may be, to all of our attendees. We've got something in the order of 1,000 participants on this webinar this morning, so clearly our topics and our speakers are of great interest to the industry, and we appreciate the participation. Today's webinar, Turn Data to Gold, Deploy Real-Time Analytics to Maximize Insurance IoT, is being presented as an introduction to the Insurance IoT USA Summit, which takes place later this year in Chicago on November 30th and December 1st. And later on during the webinar, you'll actually receive a link in the event you'd like to download the brochure for the event and see exactly what is going to be taking place in terms of speakers, topics, agenda, etc. But I'm just giving everybody a chance to log in, and we're going to get started very shortly. I'll be introducing our three esteemed speakers for today. We're very fortunate to have three real experts to help us talk through some of the topics. As an overview, the proliferation of the number of IoT devices is now flooding the industry with data and will be, and it represents the new oil, the commodity that'll change the world of insurance. But effectively improving insurance products and service and offerings requires the ability and the key to unlocking that data and real-time analytics. So during this webinar, we're going to talk about and share the tools and strategies we'll all need to deploy an IoT analytics strategy from data and AI to fully capitalizing on all of the opportunities. The three high-level subjects we'll be discussing today and sharing are getting data ready to work, the art of the possible with automation and AI, and finally the last mile, achieving intuitive decision-making, integrating IoT insights with other data sources. So with that, I would like to introduce our three speakers for today. Again, we are privileged and pleased to have them. I'm going to introduce them as each of them speak, but just so you know, today we have, as you can see on the screen, we have Ty Sagalow, the founding member of Lemonade. We have Citta Gupta, who is the general manager and data scientist of Insurance Data Robot, and Rahim Rajpar, the vice president of John Hancock. And our first speaker this morning is going to be Ty Sagalow. Let me share a little bit of background on Ty to provide some context, and then we'll give him an opportunity to share his information. So Lemonade, as you probably know, was founded in 2015, and it's the first licensed and regulated insurtech insurance company in the U.S. Lemonade offers homeowners and renters insurance powered by artificial intelligence and behavioral economics. Also launched in September of 2016 in New York, Lemonade Insurance Company is operating in New York, California, and as of May in Illinois, with expected operations in multiple additional states in coming weeks and months. And on July 1st of this month, Ty retired from his position as Chief Insurance Officer of Lemonade and continues as a board member of the Lemonade Insurance Company and regularly advises other companies in the fintech and insurance space. Quick background, Ty is a 36-year senior insurance executive veteran. Most of his career was spent at AIG, where over a 25-year period he held various positions, including Chief Underwriting Officer and General Counsel of AIG Executive Liability, Chief Operating Officer of AIG E-Business Risk Solutions, and President of AIG Product Development. Following AIG, Mr. Sagalow was Chief Innovation Officer of Zurich North America and Chief Innovation Officer of the Tower Group. Mr. Sagalow is a cum laude graduate of Georgetown University Law Center and holds a Master's of Law from New York University Law School. Please welcome Ty Sagalow. Ty?
Thank you very much, and I will apologize if you hear a lawnmower in the background. It seems to have stopped, and hopefully it will continue to be silent for our time together. Data, of course, is a critical element for every insurance company, whether new or old. But For Lemonade, we look at the importance of data from a slightly different perspective, seeing it as a transparent bilateral communication of information, which enhances the customer relationship and ultimately enhances the final product and the final service. And the importance of data actually has a more fundamental beginning. And the more fundamental beginning and the challenge for us when we're looking at the use of data and the use of the transparent bilateral communication of information from the insured and from the prospect to the insurer and vice versa, the challenges associated with getting that system to work actually goes back to some of the fundamental perceptions, some might say misperceptions of insurance. And to put it bluntly, nobody likes insurance companies. They don't like dealing with insurance companies. Obviously, they will not like giving data to insurance companies. And it goes back a very, very long time. Back in 1384, there was a merchant by the name of Francesco de Marco. And Francesco de Marco was writing a letter to his wife, and writing a letter to his wife about insurance. And this is what he said, talking about insurance companies. For when they insure, it is sweet to them to take the money, but when disaster comes, it is otherwise, and each man draws his rump back and strives not to pay. That was the perception of the business of insurance back in 1384. And it hasn't really gotten any better. The Urban Dictionary, and for those of you who don't know what the Urban Dictionary is, it is the ultimate source of wisdom of the crowd. People put in to a central source what they believe to be the proper definition of something. And those definitions that have the most similarity become the Urban Dictionary definition. So what folks think of insurance, the Urban Dictionary definition of insurance is, quote, a business that involves selling people promises to pay later that are never fulfilled. So if that's what folks have thought about insurance, and they have thought about that for literally hundreds of years, you can imagine the challenge in arriving at a bilateral, transparent communication of information. And that's what Lemonade has attempted to develop a business model to reverse by both giving information to our customers beyond what insurance companies usually give, and then finding ways to voluntarily have them give information to us. For those of you that are not familiar with Lemonade, it has three fundamental value propositions. Like most insured tech companies, we have cutting-edge technology. We kind of think our technology is, cooler than everybody else. You can apply for insurance literally within 3 minutes. There is no application form. There is no fax number. There is no piece of paper that we could send you if you ask for it. You can only apply either on the web, or we prefer you doing it on your mobile device. It takes about 3 minutes, and there is no traditional insurance form. You do it through a chat box type of technology. That's what's most interesting is it takes about the same amount of time to file a claim. Again, there is no claim form. There is no claim fax machine. There is no claim address. You can file, and you can't even file a claim on the web. The only way you to file a claim is on your mobile device, and it takes 3 minutes. And part of that 3-minute exercise is a use of behavioral economics, which I will get to in a second. The second value proposition of Lemonade is giving back to society through our annual Give Back program. What we do is we take all the people who believe in the same cause. So after you file for an insurance, you choose a charity. And all those that choose the same charity from a list of 15 are grouped together. Then we look at the profitability of that group and only that group. And if that group has a profitable year, then we do not take the excess profit. In fact, our business model says that we get 20% of the premium. It's a flat fee. It's a tax model. And so we're not benefited by not paying claims. We make the same amount of money no matter what. And so if there are excess profits, those excess profits go to charity. This year was our first give back, and 10.2% of our gross premium went to 14 charities chosen by our policyholders. Now, what does that have to do with data? As I said at the beginning of all this, if you see data as a bilateral, transparent exchange of information, where the customer gets as much information about the carrier and who we are and how we work, and then develops a fundamental relationship of trust. For example, by eliminating the conflict of interest between carriers and clients, where a carrier will profit for every dollar it doesn't pay in claims. By eliminating that conflict, you are setting up a relationship that allows the insured to feel comfortable with voluntarily giving data. We know, for example, how challenging this is in the insurance industry. Telematics has never quite worked in the personal line space, and that's because customers don't like telling their insurance companies how well they're driving or how poorly they're driving. The third element of Lemonade that does is behavioral economics. By behavioral economics, we talk about changing our own behavior in the manner that I just indicated, and much more I will get to at the seminar, and thereby changing also the relationship and the attitude of the customer. By doing that, the customer will voluntarily give us more information about who they are that allows us to better underwrite the risk. And traditionally, insurance companies really looked at data in a very, very narrow way. They looked at data about the thing, at least if you're a property casualty insurance company like Lemonade. So we get from ISO and we get from other third parties a lot of information about the thing being the stuff that you own, the house you live in, the apartment that you rent. Where is it? How likely is it to be a flood? What is the fire risk? But what smart property and casualty underwriters have learned over the last few years is something that is fundamental to life insurance, which is information about the person is at least as important as information about the thing. Now, traditionally, property casualty insurance companies have gotten a little bit of information about the person, mostly their credit score, which in the United States is allowed to be used for the purpose of underwriting homeowners insurance in most states. But that's really about it. In many states, we also can find out about your past losses and use that for underwriting, but that's where it ends. So at Lemonade, we're attempting to push that ball forward and learn more about the person. We're gathering data on things that years ago wouldn't even be thought of as important. For example, we have a tentative belief, which will be backed up by data hopefully over the next few years, that when you recharge the battery on your cell phone, something that we would have access to, will tell us how good of a homeowner's risk you are. In general, people who charge their battery more often tend to take care of their phone, tend to take care of their house, et cetera, et cetera, et cetera. In addition to that, we use data in ways that are more subtle. So, for example, when you are submitting a claim, it's a very, very friendly exercise, and you basically tell us what happened in a video. Through that video, we're able to ascertain whether you have coverage, whether you have an existing policy, and whether the event that occurred falls within the terms of your existing policy. But in addition to that, we can use face recognition software to determine the likelihood of you lying. what is the likelihood that you're trying to commit fraud? And through that process, we can run 18 different anti-fraud algorithms. As a result of that, we can make quick claim decisions. In fact, recently, the system was able to analyze the claim, to compare it to coverage, determine that it's coverage, and agree to pay it. And all that happened in 3 seconds. Now, the only way that a modern technology system can do that is by having access to data in ways that we didn't before. So I think I'm sort of running out of my 10 minutes here. So I just want to make a statement that I believe about the future. You know, speaking about InsurTech, InsurTech has been a major industry, $1.7 billion in 2016 and 173 deals. That was twice as much as 2014. 2015 was 2.7 billion, but 2 deals represented 1.4. And then according to some sources, InsurTech investments are supposed to remain, quote, hot throughout 2017. And of course, many carriers are looking at it. 9 out of 10 traditional insurers have been quoted as fearing losing business to fintech, and there are many that are actively investing in fintech. So I think the heart of fintech and the heart of InsurTech is an understanding of the new relationship that has to be formed between an insurance carrier and its customer, a relationship based upon trust, mutual respect, and therefore the transparent, bilateral communication of data. And once that occurs, we will become better underwriters, our customers will be able to be better customers, and at least in terms of the lemon tech model, more will be able to be given to society through the give back. So I think that's my 10 minutes. I'll be happy to take questions at the end.
Ty, thank you so much. Fascinating. And yes, as a reminder, again, this is Stephen Applebaum. I'm the moderator for today's webinar, and we will have a Q&A session. We're allowing at least 20 minutes at the back end, I hope, for that. And I'm sure that our attendees have lots of questions for you based on what you've shared and what they know already about Lemonade. Before I introduce Citta from DataRobot, just a few reminders. Again, we're going to do the Q&A at the end. DataRobot is a sponsor of today's webinar. We appreciate their support and participation. All of our presenters today will also be presenting at the Insurance IoT USA Summit in November 30th and December 1st here in Chicago. So if what they've had to share is of interest in this brief time they have available today, we can learn a lot more from them during the conference along with all the other speakers. With that, I'm going to properly introduce Citta Gupta. And Citta is a practicing data scientist for the last 10 years. He previously worked with Liberty Mutual Insurance, with AIG, and with Deloitte Consulting. In his current role with DataRobot, Citta is working with a large number of financial institutions, including insurance companies, seeking to harness the power of machine learning, AI, and data science automation. And just a word about DataRobot for those of you who aren't familiar with them yet. DataRobot offers an enterprise machine learning platform that empowers users of all skill levels to make better predictions faster. Incorporating a library of hundreds of the most powerful open source machine learning algorithms, the DataRobot platform automates, trains, and evaluates predictive models in parallel, delivering more accurate predictions at scale. Basically, DataRobot provides the fastest path to data science success for organizations of all sizes. Citta, it's all yours.
Thank you so much, Stephen, and thank you everyone for joining us today. And it's really a pleasure to present here, and along with Ty and Rahim. And Ty actually reminded us something extraordinary. That is, insurance is one of the oldest industries, right? And we are perhaps a lucky generation that we are experiencing the most exciting time in that one of the oldest industries. And what I'm going to do in my 10 minutes, I'm going to break down that excitement, and we'll be discussing that how we can really monetize that excitement. What are the things that we need to do in order to really understand what is behind that excitement, and what are the things that we need to do in terms of in order to maximize that. So if we really break it down, and I will be borrowing the principle of Simon Sinek that we should start from the why, and then we should look for the what, and then we look for the how. So the why behind all this excitement is customer expectation. And I'll be going to discuss more detail about what we need to do in terms of customer expectation and what we really need to understand, what is really fundamentally changing about how people are perceiving insurance. And Ty actually has covered quite a bit of them, and Lemonade is founded on that principle of what we can give back to the customer, what is the true meaning of insurance. And we'll be discussing more and more about that. The second part is the data, or the what. In order to meet the customer expectation, what we have available to us that we can utilize, and we can fulfill that goal. And the third component is the how. We have the data, we know our objective, how we achieve that. And that's where the artificial intelligence or machine learning, AI and ML, these two things would be very, very important. And Data Robot is all about this last component of the how part. We are working with several enterprises and many startups and the small companies. So one of the things that I find extremely exciting about my job as the general manager of the insurance, that I get the opportunity to work with a company which has only 2 or 3 people, sometimes 5. I also get an opportunity to work with a company like AIG and other organizations where we have 65,000, 70,000, or more than 100,000 people. And that is always very exciting because we can actually give the power of machine learning to a whole lot of people. And that how part is AI and machine learning. That part we'll be discussing during this session as well. So let's start with the data, right? And we are focusing on IoT, Internet of Things, or sensor-based data. So let's discuss the evaluation or evolution of the data in insurance industry. So insurance industry is an extremely data-driven industry, right? So data is not a new thing in the industry. And hundreds of years ago, when we just started, then also data was important. But what really has changed is the landscape of the data. So the traditional data, what we call active data, right? So data at the time of underwriting a policy, we ask several questions to the policyholders, right, or the customers. What is your age? How much you drive? Are you a smoker? How much you exercise? And things like that, right? And we get that data and we utilize that data to make predictions that will help us to understand what is the risk and how much premium we should charge. If there is an accident later on, then we also collect data about that accident. When that car accident happened, who were involved, at what time, what location, is it a parking lot or in the cross section? And using those data, we can make predictions about if that is a fraud, if there is a chance of litigation, what is the amount of the claim, how long this claim will remain open, and things like that. So data is very, very important, but the way of collecting data was very active in the past, and we'd be asking a whole lot of questions, and there would be a lot of self-reporting from the customers in the consumer side. In the commercial side, also the same idea. Like, I mean, we'll be collecting data and from different enterprises and so on. Then things changed, and people started not only depend on the internal data or the way we collect data from the customers, but people also started collecting data from external sources like LexisNexis, Equifax, and different credit industry, Dun & Bradstreet, and all those things, right? So people can get information, what we call firmographic information for the commercial insurers, and we can also get credit information from about the consumer and so on. And credit score became one of the most important components in auto and home insurance and many other things. So that's the external data. Now, where we are today, we are also utilizing what we call passive data or sensor-based data. In the sensor-based data, we are collecting information passively in a continuous fashion from our customers. And the way the telematics is the first example and most prominent example in that, in that development. And we are collecting data directly from, the car. Metromile is a great example of that sort, and where we get the data from them, and the insurance is entirely based on the mileage, right? So how much you are driving instead of different other factors. And there are other examples. So Ty reminded us another thing, that the amount of investment that we see in the insurtech right now is tremendous. It's close to 20 billion altogether, and many of these developments are around sensor-based development. Then there is other companies which are also using workplace or machinery telematics. So telematics that is going to tell us whether a device is going to fail or not. So if we know that, that will help us to react in a more proactive fashion. Then we have home telematics, right? We have different devices in the home which will tell us about the rising temperature or rising water level. If there is a little bit of water in the house, it will tell us immediately, right? So we are getting continuous data from different devices at home. And wearables. Fitbit is a great example where people can use that for life insurance, right? And for health insurance also. And Oscar is a great example where they give discount if someone is wearing Fitbit and things like that. So essentially, we are going to a direction that is called connected everything, right? So we have information that is continuously in a continuous stream of information coming to us. So that's the data part. And data is the most differentiating factor for any insurance company, right? So more data we have, and better data we have, different kind of data we have, will be always winning in a different way. The second component, which is the how part, is the machine learning and artificial intelligence. So we have this data, and as we have different kind of problems, and we are not just limited to one kind of problem, which historically was the case. The only thing that insurance company needs to do is understanding the premium and what should be the right premium that we can charge to the insurance company, to our customers, right? But now, with all this data, we can do a whole lot different things, and that is exactly what we are doing with all of our customers, enterprise or small and medium and regional, and things like underwriting, pricing, marketing, distribution, and a whole lot of things in claims management. What AI and machine learning is really doing, it is generating predictions in an unprecedented rate, and it has the ability to solve a whole lot of problems. As Stephen was mentioning during the description of Data Robot, that we are tapping into open source algorithm. And one of the key things that we do is the diversity in that ecosystem of algorithm that allows us to solve many different problems in a very unique way, in a way that we can operationalize them very easily. We can deploy them very easily. And with that, we can actually fulfill the customer expectation. That is the why part of this discussion. So what is really happening in the customer experience today, not today actually, perhaps it is the talk of yesterday, is everything was very reactive. So insurance company only bothers with their customer when there is a claim. And that has to be changed, because customers are paying premium, they deserve more, right? We are utilizing their information, so they deserve to know more. And machine learning allows us that. What machine learning is doing, using all this data, active data, passive data, sensor-based, or the traditional data, it is telling us a whole lot of story upfront at the very beginning. That is called predictions. So standing today, I know something about tomorrow. I know something about day after tomorrow. And if we know that, then we can share that information with our customer, or we can be proactive in our nature, and we can avoid losses. And there is a win-win formula there. If we know an incoming claim is a fraud, then we can utilize that information to stop that payment. And that way we'll be avoiding a whole lot of money. And fraud is a tremendous amount of bleeding that is happening there. More than $80 billion United States lost in the fraudulent claims in the last year alone. And so that proactive nature from the insurance standpoint, or from the standpoint of an insurer, that has a very good value. But Ty actually reminded us that it is not just from the insurer perspective, it is also from the policyholder or customer perspective. So what we can really do, we can analyze the data, and the prediction will help us to tell them, if you do not drive at this time, but you drive on the other time, then you will face lesser traffic and your life would be better. if that at all possible, to drive in the other time. And in a similar way that in the workers' compensation, actually people are using machinery that is telling them that you are bending this much and that can actually hurt your back. So rather than really kind of spending time or wasting money on them to be sick, insurance has a whole lot of data that can proactively tell the customer in every direction that if you do certain things, then it will actually avoid the loss. And that's a win-win situation, because loss payment, if we do not have to pay loss, or if we can avoid fraud, that will increase the profitability and impact the bottom line of insurance companies. So that's the whole idea. The why is the customer experience, right? Customer is, another example is the speed at which we are underwriting. So Lemonade is a great example of that, and everyone is working hard to get there, is if we can get a car in a click of a button, then we cannot wait for 60 days to 90 days to get a life insurance. That's unacceptable. So we can use predictions to know more about our customer, and we can automate our underwriting. That is one of the very common use cases that we work with all of our life insurance customers and so on. So customer experience is the why. In order to achieve that, we want to use the data. That's the what part. And AI and machine learning is allowing us to solve that problem. So what I'm going to do in the next few minutes, I'm going to talk about automated machine learning or machine learning automation, what DataRobot does, and why we need to have an automation in place. Now, if we really think about it, the time that we are entering or time we are already in, machine learning has to be a core capability of any organization, any insurance organization, large or small. 100 and 150 years of experience, or 300 years of experience like Lloyd's of London, or an insurance company like Lemonade that was born 3 years ago or 4 years ago. And why that has to be a core capability? Because we want to utilize our data. We want to give a better life to our customers. We also want to, as an insurance company, avoid loss and bring profitability. And that's where automation comes in. We are talking about scale now. We are not just talking about developing one or two models, and we are not just talking about having small group of elite people or data scientists who would be the only people who can utilize the data, who has the ability to develop machine learning. That's not really sustainable. That is not really scalable. So what we can do, and that's the power of technology. Technology enables human beings. The contribution of technology in the human civilization is that it allows to share the goods with a bigger group of people. And automation in machine learning does the exact same thing. It is allowing us to give the power of machine learning to a broader group of people. People like business users who understand the domain very, very well, underwriters, actuaries, and data scientists, of course, and everyone in the organization. So instead of really using the selected few to developing and recalibrating those models, we can actually give that power to everyone. And these are the three fundamental problems that we solve using machine learning automation in DataRobot. So number one is that we can develop a whole lot of predictive models in scale, and we can manage that pipeline. Managing that pipeline means that we have a continuous requirement of developing all these models. We can do that. Number two is that we can deploy this model in a very easy way using API and microservices and platform agnostic way. We can do that. We can refresh them anytime as we have the newer data and so on. And finally, we can actually tell a whole lot of stories very, very easily. So with that, I will actually close my commentary. But we are actually sharing a screen, and I have created a temporary link where you can go on the screen right now, and it will be shared with you. So you can go there and see a product demonstration, and you can actually sign up for a product demonstration of a longer time. And you can also download our executive briefing, which will be talking about different applications of machine learning. And if you're already not a client or partner of ours, definitely I would sincerely invite you for our zero-cost proof of concept so that you can actually see what happens if you throw your data to the power of machine learning automation. And so with that, I will close my commentary and looking forward to your questions. Thank you so much, everyone, for listening to us today.
Thank you, Citta. Very interesting, and of course, there'll be questions during Q&A, I'm sure. And again, thank you to DataRobot for sponsoring today. Our third and final speaker before the Q&A is Rahim Rajpar. He's Vice President, Strategy and Business Development for John Hancock Financial Services. Let me share just a brief background for context. Rahim's responsible for developing, analyzing, and recommending profitable growth strategies and opportunities for the U.S. business with a strong focus on market expansion. Prior to his current role, Rahim oversaw a retirement education team that provides individual retirement solutions for 401k participants. Rahim was instrumental in getting the group off the ground and managed all aspects of the business, which brings in over $1 billion in assets a year. Rahim has 17 years of experience in financial services and has been with Manulife Financial, John Hancock's parent company, since 2001. Rahim holds a Bachelor of Arts in Honors from the University of Western Ontario and has participated in a number of leadership and marketing continuing education programs, including the Partnership's Next Generation Executive Program. Rahim, please begin. Thank you.
Thanks so much, Stephen, and thanks all for having me this afternoon or morning, depending on where you are. I'll just begin my comments, give you some sort of trends around IoT, why I think this is a big part of the future of our industry, and really focus a lot of my comments this morning around use cases and how we've used data at John Hancock. And so I'll begin. So I really think when I look at the Internet of Things, it's changing the world we live in, right? And so it's changing the way we drive, it's changing the way we buy, it's changing the way we live. And in a lot of ways, that same expectation by the customer is going to transfer over to insurance. We're not immune from the expectation of the customer to say, it's okay for everything else to be automated and IoT, but my insurance can be the same as it has been for the last 100 years. So the question becomes, how do we leverage IoT within the life insurance space? And, I want to pause here for a second because I think before we understand how we can leverage, we need to understand what our current state is. And as an industry, our current process of buying life insurance is not the best. It's a cumbersome and complex problem. It's long, it's invasive. It doesn't put the customer at the center of things. It focuses very much on product and certain distribution models. And the reality is, if we seek to be relevant, I think, in the next 10 years, we need to look at change and leveraging data and different data points through the entire buying and ownership experience will really help bring our sector and our industry into the next century, really. When I look at how the Internet of Things is impacting us, there's a couple of themes now, that I've come up with. I think the first theme is I really start to see that data is becoming just about, everything. And the cost of accessing data is decreasing. There's data points coming from all of our interactions with customers, whether they be through the targeting phase or whether they be through the ownership phase. Data is pouring into our organizations, and we must continue to be equipped to handle all of that data, and not just simply storing it in a database of some sort. By equipped, I mean able to readily access, and use in decision-making as we build out our strategies and run our businesses. I think the next big common theme I've started to see, and this is really important, is the emergence of platform-based technology, and the introduction of APIs, I think, is critical here as well. Because, for the longest time, many of our reactions to things have been about, let's build this or let's build this, and we'd be utilizing our internal IT departments to build solutions for us. The reality is that today, far more opportunities exist for us to buy and leverage transactional solutions that work for us today that might not work for us in the 2 to 3 years after that. And this emergence has really caused us to rethink how we architect our entire infrastructure so that we can leverage data through the entire process. A couple of other quick points. I really think the lines between marketing and product are blurring. You know, as an industry, we've always been very product-centric, and I think, you know, the difference is we're moving to an organization where marketing is playing a much larger role. The line is being blurred. Where does marketing end and product begin, or vice versa? The reality is that if we're going to be customer-centric, we need to be listening to what customers are telling us. And in order for us to be able to do that, we need to be plugged into all of these data sources. Lastly, you know, as a marketer for many years, marketing has changed. It's become far more technical and quantitative. And when we look at marketing and execution, we need to be thinking about data. And you know, as a marketer, you've always had sort of this qualitative skill set and this quantitative skill set. And I think if we look at the role of marketing today, it heavily leans in the quantitative world. And the skill sets that we require from marketers in our industry are going to also lean there as well. Now, before I go on, I want to really highlight a particular case study, and that's the John Hancock Vitality Program. And the reason why I highlight that is because I really believe that with this program, we've really tried to change the way people buy insurance and own insurance. The entire experience is data-driven. And let me give you a quick recap around our Vitality Program if you don't know what it's about. The John Hancock Vitality is essentially a wellness-based life insurance program that rewards customers for healthy living through rewards and premium discounts. Essentially, customers engage in healthy activity. We send a Fitbit out to every customer who buys a policy, and they engage in healthy activity, whether it be purchasing healthy foods from the supermarket, whether it be you know, getting regular checkups or visits to the doctor or dentist, whether it be through education that they take on our app or through our website, or whether it's through exercise. All of that healthy behavior results in points, and those points essentially add up to statuses. The higher your status, the more rewards and discounts you get. It's pretty simple. The idea behind this is that we want to give customers the knowledge and the information to improve their own health, and by doing so, we're going to really engage with them through a path where they can improve their own health. When they do that, they essentially will get access to the rewards and discounts that the life insurance program offers up. So I wanted to pause and talk through that because as we looked at launching the John Hancock Vitality Program, we really looked at reinventing the entire customer buying and ownership process. And as we looked at this process, we understood that it needed to be completely data-driven, and that data needed to enable some very significant decision-making. So as I look at the overall buying process, whether it's the upfront buying decision, the process of creating awareness, the purchasing process, the underwriting process, and the ownership process, that entire journey has become easier and faster as a result of data. And I'm going to go through a couple of use cases as we look at this journey. So the first thing is identifying customer need. You know, very few people wake up in the morning and say, I'm going to go buy life insurance. We need to uncover that need. And in order to do that, we need to understand our customers. And the best tool for us today to understand our customers is data. And so the number of data sources we can now leverage to understand our customers, to understand what their intention is, to understand what their behavior might be. Data, when I say data, I'm also referring to data and modeling and analytics because we can't decouple those. But our goal here was to really develop some psychographical profiles of customers based on big data. We also want to make sure that we're capturing our customer interactions with us so we can understand what they're coming to us for, how they're coming to us. This all helps us understand which customers need life insurance, which customers need additional life insurance, which customers need different types of insurance products. I think the next area through the journey is really look at the targeting phase, really about picking the right people. How do we, identify the hand raisers? How do we segment our audience to create new markets and new needs? And how do we identify ultimately the target customer? All of that is data-driven. But the other part of targeting is finding the right message. So how do we test different messages with the customer and engage them through their entire journey? A number of different tools can be used here to increase the ROI of your marketing. Things like A/B testing creative, channel preferences, and packaging. Things like response analytics, looking at open rates, response rates, looking at acquisition costs. And then lastly, purchase analytics, which is essentially take rates, looking at, again, acquisition costs and or product selections. Sending the right message to the right people the right way essentially allows us to smart target, and that wouldn't have been possible without the use of data and analytics. Very quickly, looking at the buying experience. How do we design the buying experience? How do we loop in customers into the buying experience? What's the feedback loop look like? How do we do user testing and usability analysis? From a strategy perspective, how do we create that ideal buying experience that's measured and quantified from end to end, so that we can create the most optimal experience for each type of user coming into us? I think the next area is really how do we simplify the underwriting process. We've talked a little bit about underwriting and how it's simply not acceptable for a 60 to 90-day underwriting process. And in fact, LIMRA research suggests that most customers are okay with a 2 to 3 day wait time for an underwriting process. But very few of our products actually fall into that process. And if they do, we're asking the customer to pay for a lot of that extra risk that we take on as the insurer. But the use of applicant data, biometrics, age, gender, health data, external sources like RX checks and MIB and driver's records, plus things like credit and LexisNexis data feeds really feed a ton of information into predictive models, which can essentially separate healthier applicants from applicants where we might need more data. So the goal here is to take as many people through simplified issue underwriting where we have no fluids and faster times, and really isolate and save that traditional underwriting model for more complex, larger cases. The average American isn't looking for a $25 million life policy. They're looking for a $500,000 term policy. And most of that can be automated and transactionalized through big data as well as through AI. A couple of key things for us to recognize. Points of data that are unique for us, given our Vitality program, are things like exercise data, step trackers, heart rate monitors. These are all points of data that we use in our entire process. Healthy eating. I talked a little bit about this earlier, but our customers today can go to their grocery store, and when they buy healthy food, they get rewarded with Vitality points. We get access to that data. Lastly, this idea of lower stress, exercise, breathing trackers, sleep trackers, they're very quickly making their way into our space. And the world of health technology is very quickly merging with InsurTech. And it's hard to keep up with that change, but if for firms that are looking to get into this space, these types of data that help us understand the customer lifestyle and therefore help dictate the type of pricing, product, and or experience we'll provide for them as we go through the process. Lastly, when we look at the ownership experience, life insurance has always been about one and done, right? And with John Hancock Vitality, we've really reinvented that process. We've taken a one and done process and created an almost daily engagement model with the life insurance carrier. Our John Hancock Vitality customers engage with us on average 22 times a month, whether it's through healthy food, whether it's through exercise. That's so much more than that once-a-year policy statement, that the privacy policy statement that we used to issue, or the bill that we used to issue. That was the sole interaction point. So we, as a carrier, are tracking all of this data and using that data to better and shape the overall life insurance experience for that customer. And so with that, I'll stop my comments and certainly pass it back over to Stephen. But I'm happy to entertain any questions folks have on our use cases that I talked through, or through our Vitality programs.
Thanks, Rahim. We've already got a number of questions and just about 10 or so minutes to pose them. So just before we get into that, I need to point out that a lot of the folks on the line are paying close attention not only to what our speakers are saying, but also to what it says on the screen. So there's a typo. It says that the registration discount is for Friday, 28th of June. It's actually for July 28th. For those of you interested in attending the IoT, the Insurance IoT USA Summit later this year in Chicago, please pay attention to the July 28th deadline to save $200. And with that, I'm going to go with our last speaker first, if I may, just because you just finished, and pose this question on behalf of one of our attendees. Rahim, have you seen improvement in the combined ratio of the life insurance program, Vitality specifically, by encouraging healthy living, or is it only improving the marketing side of the program?
No, absolutely it has. A couple of quick things and data points to consider here. So I think when we look at the overall experience, 9 out of 10 of our Vitality customers would recommend Vitality to a friend or colleague. So that helps us on the marketing side, certainly. But the reason why they like that is because on average, again, our customers are engaging with us, 22 times a month. And they're engaging with us through healthy behavior and healthy activity. We get letters and testimonials from our customers all the time sharing with us how they've leveraged components of the program to change their lifestyle. On average, our customers take about 30% more steps when we look at the national average, which is great. We also see that our customers retain and actually continue to use their fitness trackers much longer than industry averages. And so we're starting to see the healthy behavior, healthy activity result in healthier lifestyles for customers. So it's both a benefit for the customer and a benefit for us, because those customers are going to live longer through this healthy lifestyle behavior.
Thanks for that. I've got a couple of questions I'm going to bundle together for Ty Sagalo for Lemonade. Just before I do, a reminder, you'll be receiving a link to request a brochure for the conference, and please consider attending the Insurance IoT Summit later this year in Chicago. And start with the brochure because it's very informative. Ty, I'm putting two questions together if you don't mind. One is, are you looking to go international with Lemonade? And the other is, how do we join Lemonade? I'm assuming this is an insurer asking the question. I can't tell. And the follow-on to that is, why are Allianz, AXA, etc., all investing in a possible competitor or disruptor to their own business models? So those are the questions. I hope the dreaded lawnmower has not returned. Ty, can you help?
Yes, I can. And those are three separate but excellent questions. I will answer all of them. One is how do we join Lemonade? Two is international, and three is some of our investors. So I'll take the easiest one first. As in the case of any insurance company, especially a property casualty insurance company, geographical diversification is important for both us and our customers. Right now, Lemonade is licensed in states in the United States, representing 43% of the market. That's about 13 states that represent 43% of the market. We are operating in 3 states, New York, Illinois, and California. Obviously, geographical as well as other diversification is evident there. We will be looking at international expansion. Obviously, we're first concentrating on the United States, but international expansion is definitely within our plans. The second question is, how do you join Lemonade? That's actually two different questions. One is, how do you join Lemonade as an insured? In other words, how do you buy the policy? But the second is, how do you create a Lemonade stand? I mentioned to you before that at the end of the insurance application process, the insured has an opportunity to choose from 15 different charities. So the question may be, well, what if I want to be one of those charities, or my charity I want to have on the list? Is there a way of doing that? I'll take that question first. The answer is yes. There is an easy way of doing that. We call it creating a Lemonade stand. And so if you want to create a Lemonade stand, you simply go on lemonade.com. There is a simple form to fill out. We do not judge Lemonade stands. We do not make one Lemonade stand more important than any other. The only requirement is that the Lemonade stand is created for the purposes of a charitable purpose. What in the United States is called a 501c purpose. But beyond that, anyone can become, or any organization can become a Lemonade stand simply by joining lemonade.com. If, of course, you want to be insured, if that's what the questionnaire meant, you could do that by going on lemonade.com and clicking on check our prices. And again, it's a 3-minute process to apply for insurance. Or you can go on the Apple Store or the Android Store and download the Lemonade app and apply that way. Again, a 3-minute process. In terms of your third question as to why Allianz, XL, Innovate, and sort of traditional insurance carriers, or I should say the VC arms of traditional insurance carriers, have decided to invest in Lemonade, I guess I should say, ask them. But having said all that, the answer I think is pretty self-evident, which is that these VC arms of traditional insurance companies are, in the words of Wayne Gerstein, looking for where the puck is going to be. And if you are going to survive in any industry, this is the lesson from Kodak and many, many other examples of traditional companies that have failed as a result of not being innovative and not seeing where the puck is going to be. So we like to believe that XL, Allianz, Munich Re have made huge investments, not in Lemonade, but in other carriers, and there are many examples of it, AIG and Hamilton. Quite a percentage of traditional insurance companies have invested or partnered in some way in InsurTech. And I believe the reason for that is that they correctly see that is where the puck is going to be.
Thanks, Ty, so much. Satadru, I'm going to do something that's probably totally unfair, but to ask you in about 1 minute flat to answer this question as best you can, and that is, sure. Can you please help me in understanding machine learning automation? So what is machine learning automation in 45 seconds?
Absolutely. So the machine learning automation has 3 components in it, and it is taking the best practices of world-class data scientists and wrap that into a software, right? So the most difficult part of doing a machine learning project is how we take a data and bring that data to the decision making, right? And that has to go through a whole lot of pre-processing steps. That has to go through a whole lot of different algorithms. And machine learning automation actually does all of these things automatically. So that's basically what we have. And we actually put a link on the slide that if you go to the DataRobot website, www.datarobot.com/IoT, then you can actually see a product demo, or you can actually even register for a longer product demo. And when you do this machine learning automation, the 3 things that we remember in mind is, number 1, it has the ability to develop a whole lot of models. And at any point of time, as you have newer data, you can recalibrate this model. So it is giving you a capability that anyone at any time can develop like any number of machine learning model. And then that's basically the first component. The second component is the API-based deployment, and the third component is the storytelling. Yep.
Thank you so much. We're over time. I want to thank all of our presenters, all of our attendees. We've got hundreds of questions that we couldn't get to. Please come to the annual Insurance IoT USA Summit later this year and get them all answered. Thanks, everybody. Have a great day.